Did any of the equity that you got at any time at Innosight, did it ever just boom, like you got one big merger?
So none of the equity associated with any of those startups from the first 2 years. But when I rejoined Innosight, that was a private firm, and Innosight had had a fantastic run from 2001, I think, when it was technically founded. 2005 I joined, and I then became a full partner 2015. Innosight was acquired back in 2017. And so that was my second experience now of being a part of a leadership team going through a sale of the company. And I was a junior partner, small amount of equity, been there a couple of years, I think, in the partnership when that happened.
Yeah.
And Innosight was acquired by Huron Consulting, so a much bigger billion-dollar consulting firm based out of Chicago.
Right.
That had a way more extensive services, still subscale. Back to the conversation we had earlier, relative to the $3, $4, $5 billion type firms. But it was a publicly run professional services firm, and Innosight was a boutique strategy firm. A couple 100 people or so, give or take.
Did that
mostly
RFID
US
technology ever go anywhere? That company?
No, but I'm still the proud owner of a patent.
That's cool.
So at some point, I have the right to stop someone from pursuing
doing
the same
it, right?
idea.
You could sue them. That's very profitable, depending on.
I haven't checked. It's not something. I would love to be contacted by someone. I'd just be tickled. I wouldn't plan to ever use it. But it's it's fun to be a patent holder on something. And I think
really
the patent
cool.
was finally. It's a slow process. You apply, you get a provisional. But I think it was probably 2-3 years after we'd wound that company down before I got something in the mail. It was more like
it takes a long
entertaining,
time.
stick it on a wall if I ever need to.
Right. And it's expensive depending on what type of lawyers you use.
Yes.
If you know how to do it yourself, you can. It's just not easy.
I'm not a patent lawyer. I was one of probably 4 or 5 names on the patent. But if you search for my name and patent, you can dig that patent up. It's
so cool.
Publicly available, which is, I don't know, it's one of those little things that feels like an achievement, but it's not. It's like having raised money. Great, you raise money and spend someone else's money. But just like raising funding, getting a patent feels like one of these kind of vanity metrics that it's kind of fun to check off later.
So I've got one last question on this one. I wanted to know, when you were raising capital for this education venture, you raised from Bill and Melinda Gates Foundation, you've raised from multiple different sources that were very credible. How do you do that? Because obviously it's not like you're going to Bill Gates and you're saying, "Hey, give me money." You're talking, you're networking, you're going to events. What was it that you felt created that? How did you get in the room to pitch?
Got it. So there's what we did, and then the advice I'd give people.
That's the first one, and then the second. Let's go.
So what we did was we tried everything. You send cold emails in to VC firms up and down Sand Hill Road. You work your professional network, and I had a few friends who were in VC. For example, I remember hitting up a business school friend. Actually, he hit me up because he'd sat on a plane next to another VC who was interested in the education space. So I get an email out of the blue from this friend saying, this partner at Union Square Ventures. And I remember following Fred Wilson's blog back in the day, and I was like, oh my goodness, if there's one VC firm you want to talk to, it's Union Square. So we dutifully went up there, had a 1-hour meeting with one of the principals there. No chance, our startup sucked, and it shouldn't have been funded. And they realized that very quickly and humored us through the next hour. We ended up scoring probably 4 or 5 meetings, but I think it was all through professional networks. And they were all very pleasant meetings and people asking a lot of questions. And in hindsight, I think it's pretty easy to understand. Like, we were an atypical founding pair. Neither of us were technologists. And this was a technology startup.
Right.
What we did have in spades was vision in terms of where we wanted to go, and I think a pretty good narrative to go with, disruption of education, where we thought the market was going. So I'd say the pitch deck was good, but if you're evaluating the team and the passion and the technical wherewithal, then I think we were probably shaky, and I think that probably put a lot of the more professional, traditional investors off. However, we made a lot of friends attending conferences, and in the end, the funding, I can't even remember how we got the funding from New Schools. I think we'd met one of their investors early on, and they really, really liked the story, and I think they managed to get themselves comfortable with the pitch, the narrative. It was very on point for what they were trying to do, democratizing education, which is what they wanted to do, and they were a mission-driven fund that was, while they wanted a return, they were really focused on the mission, And so I think perhaps we spiked in things that they cared about, and we.
That's
so part of the story, therefore, that I think is worth learning is, you've got to find the investor that's the right fit for them and for you. They need to want you, and you need to want them, and there has to be something more than capital. And they were so helpful in terms of getting us pilot programs and introducing us to potential customers, because that was the world in which they lived.
Right.
I think they were also instrumental in then lining up our second funder, which was Bill and Melinda Gates Foundation, and that actually came through a call we got at 11 p.m. one night from a gentleman who sat on a committee that was advising them, and they were looking to make their very first equity investment, because they were mostly grants, but they were intrigued by the idea that perhaps they could get more accountability, drive more return, and do good by actually driving that return. So we got this call from this gentleman who's the CEO of another education technology startup who was advising Bill and Melinda Gates Foundation and their education business. And he basically said, if you guys are interested in funding, I've just learned that this committee is looking to put some funding in. Yeah. They're looking for applications. They don't have very many. But if you get yours in by midnight tomorrow, I think I can steer $500,000 your way.
Wow. That's how the story ended. Yeah, you said say less.
Send us the template, give us the email address. We had our application in, and luckily we'd had a fundraising deck because we'd been running the round. So I think it was a reasonably sophisticated. It just had to be sort of shifted into the language that they were looking for. And in the end, they didn't do an equity investment. It turned out to be a grant that had, we had to write a report and so on. But between that and the funding we got from New Schools, we had a runway for 2.5 years or so. So this is back in 2008, maybe. Yeah. So I think that was the funding that took us through 2010, when ultimately we couldn't get that business ready for a Series B, which would have been the next round. Just didn't have the metrics. So it was like, okay, it's a lifestyle business. With a bit of work, it could be profitable, but that wasn't what I was going to do. So that was when I transitioned back into the full-time consulting. And my first client was then a big educational textbook company. That was wanting to learn digital. Firm? Can't share the details.
Okay, no worries. NDAs.
But there's not that many of them. But think, very, very large producer of textbooks. And this was pre any publisher doing anything digital. At that point, digital was like, well, we could create a PDF of our book, but how would we make any money? Who's going to pay $110 for that?
Oh, well,
I have. But we were also at the point where schools would be mandated to buy textbooks because they'd be on the approved list, and districts would often make the purchases. And these things would sit in the, still shrink wrapped in the back of a classroom, while the teacher had discovered YouTube, because it's now 2011, 12, so YouTube's been around 4 or 5 years and starting to hit its stride. Khan Academy's kind of hitting its stride. It's free, and a lot of the teachers who were on that were starting to project videos in class and give kids logins. And
but wouldn't they have to get those lessons approved? That's the thing.
A lot of teachers are entrepreneurial.
Interesting.
So they were like, oh, well, they're still formally using the textbook and doing the homework, but it's like, oh, let me show you this could help, or try using this at home.
But they're still selling the textbook.
Yeah, but if you're doing growth strategy for a textbook firm, how many more textbooks do you think you're going to sell 2 years, 5 years from now?
Right.
And you start to say, well, okay, teachers know us. More importantly, school districts every year buy from us. So how do we think about what the next version of educational solutions look like that we sell to school districts? Because we've got that pipeline, we've got the sales relationships, we're trusted, we're an approved vendor. All we have to do is sell something that isn't a textbook and better addresses the needs of teachers. So that's a classic. We sort of know the bounds of our growth strategy, but what is it we're going to sell? Hey, Innosight, can you come and help us figure out what the growth strategy, the product strategy is, and then how do we actually conceive it and launch it? So that would be a classic early, and so I had this lovely transition from doing education startups into consulting. And once you've run that process for an education firm, it's like, oh, now it's a medical devices firm needs help, and you start to spot the patterns. Well, the pattern isn't you need to know a lot about medical devices. The pattern is you need to know, do you have a sales force? To whom do they sell? How often do they buy? Is it what does that process look like? Okay, what are you really good at? And then you start to and you work alongside the client. And so I fell in love with that sort of build the innovation growth product strategy. And then over the years, I started to build a lot of relationships with C-suite firms, large firms, get trusted by boards and leadership teams. And I started shifting more into the long-term strategy that was less about innovation and growth, which is where I started, and started to become more about, well, look, how do we triple the valuation of your firm over the next 3 years?
Right.
And that's now still about narrative, which is an early lesson I learned. It's about what is your source of competitive advantage? It's about the entire product portfolio. It might be about how you reorganize the company. It might be how do we do M&A? How do we move into new markets? And so over the years, I started to get just better at sitting with C-suite leaders and thinking about that biggest picture frame. And I started to learn, and this was reinforced in my more recent roles, there's very few people in the world that are good at doing that.
Right.
Most CEOs grew up, say, on a CFO track,
right,
and all of a sudden they're now talking to investors about
they're there 15
the whole
years,
company.
the same company,
yeah,
and they don't have the knowledge that they would have gotten by jumping, doing consulting, working with multiple different firms. How did you grow and scale for each of those?
Yeah, and so that's what I'm now really good at. I can sit with a CEO or a board and have, without going deep into any one part of the business, and without even really knowing the business in depth, I'm very good at having that broad-based conversation, challenging assumptions, asking the questions, and pushing them to think through, how do I take my company from a valuation of this to a valuation of that, which is typically the goal investors care about. And that was a lesson, a long learn coming. But once you understand how to think through that valuation lens, it's like, okay, well, you've only got a few levers. You've got organic growth, inorganic growth, you've got your costs, and you've got the narrative that persuades people they should pay a multiple. And there's lots of subordinate questions under that. But I then spent quite a few years advising people on that. And the final hop of my career was advising Grant Thornton.
Yeah, Grant Thornton. I'd
on
love to hear
topics
about that.
related to how should they grow.
Right.
And this is a live and ongoing and active client, so not company that's still living through a lot of the implications of everything talked about. So I'm not going to go into any detail of that. But the part I will share is I then built some incredible relationships with the leaders, with sort of the board at that firm, and I reached a point where Innosight was no longer giving to me, I'd been there 18 years. Right. It was the growth personally for me, professionally for me, the excitement every day wasn't quite where what Grant Thornton was. And the pitch there was come and lead a business unit, have a few hundred consultants, a P&L that's sizable, and go and grow that organization. And that was a much broader set of offerings, but allowed me to start to put into practice a lot of the things I'd experienced leading smaller teams, accounts, and then I had a fantastic ride at Grant Thornton because we then went through a transaction where New Mountain Capital, a private equity firm, came in, and they most certainly think through the lens of valuation. How do we take a firm like Grant Thornton, take it from here to here? We had developed a thesis, they had a thesis, these things sort of come together, and a transaction occurred. And after that transaction occurred, the CEO had reached out to me and said, within hours of that transaction, hey, I have a new role for you now on the leadership team, C-suite. So I took on my first C-suite role to oversee revenue growth for Grant Thornton. Initially the US platform, but the firm, if you can see in the news, it started to expand the US platform by adding on other parts. So it was an increasingly a global revenue that was, $2.5 billion and rising pretty quickly.
And when were you there when they switched over from just US-based operations to international operations?
Yeah.
What did that look like in the department and the business unit that you were focused on? How did that change, and how did you guys build teams and processes in those other countries? Because I know that it can be very difficult when you're looking at another country and you're trying to understand, well, what's the culture there? Yep. How should the organization be filtered? What's the best product market fit for that specific location?
Yeah, so I understand your question. I like it. However, I'm not going to, nor am I able to answer that question in terms of what we were acquiring was existing Grant Thornton businesses that already had those questions answered. And so it was more of a how do you integrate the back end operations or maybe go to market operations so that we can go together as a more unified client team, right? If you've got a team in one country and a team in another country serving the same global bank, for one example, ideally you send them one bill. Right. Ideally, this part of the project team knows exactly what this part of the project are doing, and furthermore, they're introducing each other and other third parties to say, we can offer a more holistic, thoughtful set of solutions to your global organization. Now, the reality is somewhere between that nirvana and multiple fragmented different country teams unaware of what each other's going on. And you can imagine that you can't sit on either, no one sits perfectly on either end of that spectrum, it's in the middle. So the idea of an acquisition is to start to, allows you to then say, how do we start to tighten up, truly have one set of shared services and one unified, show up as one team, right? So how do you do that? I don't think that's the question you're asking. You were thinking more about how do you think about adjusting a product to go to a new market. But I mean, it's kind of how you think about it. Post-acquisition integration is you've got to find the relevant people in each teams. You've got to take what was two org charts and turn it into one. Sometimes that's exactly the goal, because you don't need 3 people doing the same job if it's a job that only needs one of them in the firm. So you get your necessary cost takeout, synergies, right? But that's not why you do these things. It's not really about the cost takeout. It's about you can do a whole lot more growth. You can be far more competitive relative to other firms in the market if you have a more buttoned up, holistic, offering. And for me, I had the title of Chief Revenue Officer. Costs weren't what I was there. Like, I had to manage my organization and the headcount across multiple countries to a cost, and sometimes those cost targets were like, you need to find some space in there. But my real goal was, okay, now you've got these 2 things. How do you get more out of them than the sum of their parts?
Got it.
And that to me was the more interesting part. My entire career was spent.
Of course, rather than reducing strategy, costs and reducing, headcount.
Running a P&L, you got to do both.
You have to.
You got to hit top line and bottom line goals. Yeah. But like anything, stories evolve over time, and there's always multiple paths to hit a valuation target. Mm-hmm. Ideally, you want to hit them by getting the top line, the organic growth right. But in a pinch, you can work, costs, but that's a gift that gives once. Right. You take cost out, you get a margin expansion that year, you get a boost to valuation, but unlike revenues, which can grow indefinitely, costs can only be cut until they're gone.
Can only be cut so much.
And every cut in cost takes out an opportunity to invest in future growth. So it's a very delicate act, and we were blessed with great partners who were long-term oriented, which allows you to be thoughtful when you're thinking about both top and bottom line.
So that's just fascinating. I wanted to know also about, maybe you don't have to speak on specifics, or you can leave names out. Right? But I'd love to know about client acquisition in these new markets.
Okay.
How did you go about doing that? Of course, you had the name, right? You were part of a
new
firm
markets.
Well, when you guys went international, also just
so we acquired firms that already existed.
Okay, so you did mergers. Okay.
Yeah.
Okay.
Exactly. So so the one that's public, for example, is Grant Thornton US acquired Grant Thornton Ireland.
Okay, so they were separate entities?
Yeah. So that might surprise you. In fact,
it surprises me very much.
It surprises a lot of people. Without going to details, you could think of it as sort of a franchise.
Yeah, franchise, got it.
That would be the most simplistic way of understanding it. So separate financial entities share a brand, but even that brand is owned by other
They sold the rights to somebody at one point in time for the U.S. model, and the U.S. model then acquired. Okay, because I thought it might have been separate companies, but it's just Grant.
But not linked financially, which is a key point. And because they're not linked financially, they might both have their own payroll services. They might both have back office in India to do PowerPoint development or analytics. So if you bring them onto one platform, you can say, well, let's have one back office, one payroll, and that's simplistic examples, but just to give you a flavor of.
What was one of the greatest cost saving drivers that you had that you went ahead and did? Was it outsourcing, or just to get an
answer that one.
Okay,
that's too.
Okay.
So the reason why I love the question. What you might not realize right now is just how hot the professional services market is. Mm-hmm. So I think I mentioned earlier, I don't know if it was on camera or not, that there's been a lot of consolidation, a lot of ownership structure changes, a lot of investment going in, whether it's private equity money or one firm buying another or 2 merging, and so all that's happening. So the secret sauce for how any one firm, the one I was at, or others, relates exactly to that answer.
Okay.
Which is, now what I can do is say there are many levers you could pull. For example, what is the hierarchy model of your firm, right? A lot of people are talking about now, which is, what should that look like? Do you need the same number of analysts on your team as you with AI coming online as you did? I have a great friend, Dave Duncan, who just wrote an article in Harvard Business Review like 2 weeks ago, saying we're moving from a pyramid model, which people have often heard, to an obelisk model, and that's happening over the next 5 years.
Right.
I know firms made big decisions. Well, it's scary because it used to be like, for many people at certain universities, and certainly my business school, 40% of the cost went into consulting or banking.
Right.
I have to imagine 5 years from now that looks pretty different. That's just a direct consequence of the changing shape. Now, other industries I think will emerge, but there's big existential questions right now being asked about whether this disruption is like or unlike other disruptions of the past, where there's always a naysaying crowd that says, oh, jobs will be destroyed, and then another crowd that says, oh yeah, but new jobs will be created that you didn't even imagine, prompt engineer, right?
I mean, let's be honest here, maybe, but it will reduce ultimately the workforce that's required to do specific things and to compete certain companies eventually.
I believe this one will be more damaging in terms of job destruction than a lot of the other prior. I don't believe it'll be quite as bad, I think a lot of new jobs will emerge, but will they emerge at the rate at which jobs are being destroyed? I don't think so. So I say that because that's one lever, right? Another lever you mentioned is offshoring, right? Everybody's had offshoring centers in India for a while. So I'd say the right way to ask the question that's safe would be, every firm has to figure out the answer for what they think they need to look like in the future. But I would also argue that AI versus offshoring are economic substitutes to a degree. They're not perfect substitutes, but they overlap. Because if you need something done at lower cost, the question is, where is it done or who does it? Right. And that could be AI, it could be the Philippines, it could be Vietnam, it could be China. Like, every firm needs to figure out their own answer to what the end state looks like and then move towards that. And depending on whether your answer is right and how quickly you move, you will see a valuation change in the market. And I'd say different firms will make different choices, but it would be too sensitive to have points of view about the speed, the timing, the percentages, and so on.
Gotcha.
And then there's others, right? How quickly do you move from episodic projects to projects that look more like ongoing revenue? Because that's valued differently in terms of its predictability and terminal value when you're doing evaluation. I'd think back to the question of proprietary sources of data. If you are the interface layer as a professional services firm, to what extent are you harnessing and gathering the right data that clients allow you to gather and benefit from you having, and then translating that into new services that you can offer back to the clients because you are best positioned, giving you a vantage point. What do you lead with? How do you think about pricing? There's 101 levers that everybody in the market would agree these things drive valuation. And then there's competitive strategy, which is, doesn't matter, whatever choices a competitor make and you make, you're now in the market together. So there's the marketing, the positioning, the use of data to say, how do we preempt? How do we learn about an opportunity faster? How do we position better? And so there's still a huge part that then comes down to people. And that's actually where I spent most of my time in my last role, which is go-to-market, revenue operations.
Right.
What is the process by which any given partner, principal at a firm is armed, empowered, supported as they try to go out and just build relationships with clients and make themselves invaluable, indispensable for long periods of time. And that's how the game is still being played on the ground, and we're in this wonderful transition from a game which is primarily driven by people and politics and culture and relationships, and has been and will continue to be for a period of time, while cost effectiveness of those people is starting to transition fairly quickly towards your sources of data, your sources of your platforms, your technology. And the next 5 years is going to be a riot. For professional service. I was thinking bloodbath, riot. It could be a huge amount of value creation. It's going to be. I think that's fair. It's hard to say. There will be winners and losers. There will be massive winners and massive losers.
Right.
Because no two firms are approaching this in exactly the same way. And we'll see 5 years from now who really did have a sustainable source of advantage and who made the right bets with the answers to all these questions.
Yeah, I think that was so great. I love it. I'm going to rewatch that just to unpack it. Because there's so much gold in what you just said. There's so much gold. And that's why I've been trying to take the process of staying as quiet as possible, to say it in a very respectful manner to myself, other than saying I needed to shut up, just to listen, because this is some incredible information. The amount of information that you're giving these viewers and what they can learn from this in regards to building their own businesses, in regards to going back to their firms and trying to create systems and processes that can ultimately provide value. It's really incredible. I mean, I want to use that to now transition to something you can talk about, which is your new firm. I would love to talk about it. Please tell me how Porter came to be.
This story is now going to veer into the personal a little bit.
Of course.
And then back to the professional. I have always been of the philosophy that you should work to live and not live to work. Mm-hmm. I had colleagues over the years who have literally passed away at their desks working. Wow. And lost a friend in my fantasy football league a couple of years ago to a heart attack while he was out cycling. And then my wife, as you know, was diagnosed with terminal cancer back in February of this year and passed away earlier in August. So this has been a year of change and reflection. And ultimately, I found myself one day working in my office at one end of the house, earning money, which in theory was paying for a caregiving team that was supporting my wife at the far end of the house. and her cancer was terminal. Chemo immunotherapy was not going to work. And when you have 100 days, it felt like I was making the wrong choices.
Right.
And it had made sense for me when everything was up in the air and ambiguous, and I live just sort of in the Malibu area, so terrorized by the fires, living in Airbnb during those while my wife was in the ER and then back at home, and really reached a point where it just made sense for me to say, okay, this phase of my working life is over. So I would love to say that it was all thought out and entirely planned, and I was ready and excited, but the reality was it reached a point of sort of crisis where it was just time for me to take a back seat and go be a full-time caregiver, and best decision I've ever made. So
That's
we
so
had
great.
100 amazing days together for June, July, bits of August. I have a grown-up daughter who's just in the process of transitioning to college, who's deferred that a year. So not only did I have time to spend with my wife, but I had this wonderful opportunity to spend time with my daughter.
Of course.
So the reality of the situation, because there's always marketing spin, is that yes, I have a new holding company and vehicle, and I think that is something that will become an area of focus more over time. At this point, it's a vessel into which ideas can be poured and little bits of things that I do. And it's always good to have a sort of more proactive point of view on these things. So the way I describe Portal is it has now become the holding vessel for investments and supporting advisory work that I do focused around some of these big challenges that face society. And that emerged really by reflecting on the individual startups that I was either investing in or just talking to or inspired by, where I have friends who are driving those things. And there were a couple of them. And when I took a step back, there's one which is focused on actually the retail space, but really it's focused on just the incredible inequality in terms of pricing. And you look at the massive divergence of, you want to buy something online, how hard it is to find the best price. In this day and age, you'd think you'd go to one site and it would rank order.
I mean, it depends. It depends. Like, if you have knowledge is power, and if you know where to go and you've done the research and you've found ways in order to find, like maybe if there's even ways to buy products for 30 times less than what they are valued at.
And it takes a lot of work and a lot of effort to do that in this day and age.
Does,
And so one of the companies I'm involved with has figured out how to basically easily and simply with a great user interface, which is where I've been spending most of my time focused on, which is how do you actually bring transparency to pricing on the internet. So if you know the specific SKU of something you want, might be Amazon has the best price, probably not, might be eBay, that's actually surprisingly high, or it might be some vendor you've never heard of that has the best price today.
Right.
And it will look at all of those, all including, and ensure that you get the best price from whatever you want to buy. And I can go deeper into the financial model, but that's a company that feels to me is actually going to help, frankly, fight the price inflation that we're seeing a little bit, and be so it's got a nice mission, because so much of the cost, the marketing cost in the marketing ecosystem today goes towards just a very small, less than a handful of very, very large firms who basically enforce a tax on lead generation within the e-commerce space. And I think that it's not a monopoly, but it's not even a duopoly. We have to go up to 4, a quadropoly. And I think that needs to fall, and it's inefficient, and I think there's way better ways of doing it. So I've made a bet, and that's one of the portfolio companies. The other company that I'm now kind of fascinated by is in the healthcare space, and it's working on the problem of denied claims.
Oh my God, yes, that is a hard thing to deal with. I went through that one time. I had a surgery, and they made a mistake with my with my insurance. They billed my secondary before my primary, and then that caused this whole issue. And basically, it took 2 years to pay all the bills because they had never charged my my primary correctly. Some did, and then obviously I paid those right away, right? Whatever was left. But this is a large issue.
Yeah.
And the inefficiencies.
And think about the stress you felt.
In insurance, oh, it's horrible.
Think about the stress you felt, and now imagine that the insurance company has just refused you a liver transplant.
Oh my God.
Okay? And think about how many times that happens. It's not a huge amount, but specifics of, say, a liver transplant, or let's say you have asthma, and it's your asthma medication. Nope, we're not going to cover that.
Right.
Like,
and you've been paying for this forever?
Life and death, potentially, and in reality for people. And so there's a company I'm fascinated by, and I'm doing some advisory work for now, who is leaning into helping people who've been denied use AI to write their claim, an appeal.
Oh.
And their AI solution costs a few dollars, like under $100 for you to refile your appeal, but they have an incredibly high acceptance rate of their appeals. Oh. And to me, that's really interesting because we have an equilibrium in the health insurance industry where it is deemed acceptable that stories like getting denied a liver or kidney transplant are just accepted. Like that's not a good place to be. So we're in an equilibrium, which may be a stable equilibrium, but it needs a little activation energy, if you use my chemistry metaphor, to push it out of that stable equilibrium into a new equilibrium in which people shouldn't be denied claims for that type of thing. And I think AI is the weapon to do that, because right now people don't have the knowledge, information, time to fill in an appeal. But AI allows you to click a button, particularly if it's a standardized case. Oh, it's asthma. Please upload these forms that you have. Boom, we generate the appeal. And the burden on insurance firms to process these things makes it such that not only are they going to have to say yes, it's going to be costly if the number of appeals start to come in.
Right.
So I like this because I continue to want to back disruptive companies where you're going to start to see systemic change if the company is successful. And so I am out there, healthcare, inequality, and the other one that is now a more recent passion.
Wait, do you mind if I ask you a couple on that one?
Yeah, go for it.
Because that's fascinating.
Yes.
I mean, going through that in general, I wanted to ask, because at first I was struggling to see how it was going to impact, because they would just deny again, right? A lot of these insurance companies are just going to deny. But it's fascinating because if you increase the number and volume that they have to deal with, they're not equipped to deal with that, number one. Number two is it's going to change.
It costs them on the order of...
Okay.
So it costs about $50, I believe, that's what the company charges to submit. I believe it costs approximately $800 just to open the envelope, the proverbial digital otherwise envelope.
Yeah.
Furthermore, there's lots of other things you can do. For example, when you file a denial, you can put a company in litigation hold, I believe it's called.
Okay,
which
that's
instantly incurs legal fees. It also incurs data storage fees. So the point being
how would that happen? Like,
so I'm not an expert in the details, but the idea is you make it costly and painful to have to process a denial, because most people don't know that this is how you should do your appeal. And they accept a certain level of denials, which saves them money, they don't have to pay out, and they accept a certain low level of cost of having to deal with an appeal. So now just imagine the P&L of a large insurance firm, and you start to say, that's going to 10x, then 100x, then 1000x the appeals. Every one of those is actually now going to be more expensive because we're going to put them on holds or whatever, incur certain costs. Furthermore, you're now going to have to start paying out, and you can start to look at the economics of insurance, which are good, but they're not great, and the loss ratios, and you can start to see how it wouldn't take a major change in trajectory of the appeals to start to shift the underlying aggregate denial or claim rate, and therefore the costs they incur. And this, what's interesting to me is it needs to be done in such a way that it actually does systemic damage to the P&L insurer, such that the investors in those businesses then look at it and say, oh, I can see where this is heading, which now puts further financial pressure on these firms as debt becomes more costly, as growth therefore looks a little lower.
And then they look to simplify, which means they just do the claim in the first place because they don't want the costly legal.
And that would be a great outcome.
Right.
Or they say, let's make it easier for you to do the claim. And instead of seeking to deny, they discover the best thing to do is actually to, in a really cost-efficient way, seek to get you approved the first time. And that might require other systemic changes in terms of how they make the recommendation in the first place. Either way, it can't be a worse off place, I don't think. And that's the goal, is to make it overall a better place. And if that means we need to move to entirely different models of insurance over time, so be it. I'm not an expert in the space.
I think the insurance space is completely disgusting now, especially fires, as you were saying. I don't know what you do with fires,
but is it
insurance oriented?
Which is broader And we look at the prevention, you look at asset repositioning, you look at the rates, you look at what's happening in the political environment, you look at the technology that could spot fires faster, or you look up, there's a number of ways in which you can intervene at different points, at different time along the sort of it's not a value chain, it's like a chain of destruction and then reimbursement. But and again, I'm early in this journey, right? So I retired 3 months ago.
Oh, wow.
And so I am in the beginning of the journey with Portal to figure out how I want to fill that vessel, back to the analogy we were using earlier. And I want to work on problems that matter, problems that have scale. Insurance, after going through what I went through this past year, is close to the vest, both on health and wildfire. The retail one, I like that there's a mission-driven element behind it, but I'm also fascinated by the idea of disruptive solutions that target the weak spots, structural weak spots in sort of large monopolies or quasi-monopolies.
So tell me about the retail one. Was that one?
That was the one we discussed in terms of so many dollars. When you're marketing, the old joke.
Okay, right? I understand. I thought you meant box store, meaning like in retail.
No, it's the tech.
Tech side.
that you want to take down because
online.
I mean, all the money made by these large tech firms, a lot of it comes from advertising, and the advertising still today is you spend $100 in advertising and you don't know which 50% was wasted. So it's a very inefficient.
I know, it's crazy. It's very hard to find a way to be an effective advertiser. I mean, nowadays
they pay per click,
Facebook,
not pay for a purchase.
Yeah.
And the idea behind this new company is it's more of a pay for only for the purchases.
Oh,
that are
interesting.
made, so there's no more any.
Oh, so you guys charge the individuals who list
only when the only time payment get made is if you if something is sold. So the idea is you bring certainty to the people who have marketing dollars to spend, is rather than spend a whole bunch on some nameless big tech firm where you're generating clicks and leads, which may or may not convert, is we want you to take some fraction of that, send it to us, we will guarantee you a number of purchases.
Have you guys integrated affiliate links and affiliate marketing
I'd say it's a competitor to the affiliate business, but you could also imagine partnerships there over time.
I see a lot of partnerships with that because especially with growing user base, you could then funnel more people to the website via affiliate links. I think that doing that over time will then also bolster the brand and then will allow you to pay, because you're paying the individuals who list on your platform, right?
I don't want to dive deep into the model, but essentially you're finding the vendors who want to sell and saying, we will bring you a purchase for a fee.
Right.
And they could look at that and say, well, if you can, if it's $100 pair of sneakers and I'm normally going to spend $50 on average to advertise every time I list, 100 sneakers, I spend whatever, $50,000. Or why don't you just, we'll bring you 10 sneaker purchases, you pay us 20 for each one. Right. What we're going to do is put 10 of it straight into cashback, or taking the price down. And the reason we'll get the sales is because we guarantee it will be the lowest priced item. So that's the way it works. So basically it takes the money that would otherwise flow to the big tech firms and breaks it into two chunks. A small piece would come to this firm and the rest would just be given in the form of discounted price to the buyer. So it's a much more elegant, simple model. And it's a great way to then partner with any platform that has eyeballs to monetize.
I love that. I mean, I wanted to unpack a little bit more about insurance because I know that's super fascinating. But the insurance aspect, what I realized and what I thought was very crazy is how inefficient the billing of insurance is and how they outsource to third parties.
On health insurance.
And you can't even communicate with them.
Yep.
And half the time, like you call a doctor's office, you get transferred 3 or 4 times and you can never find who's there. And then they go through the review process because they need to go through that review process, 30 days, minimum.
Yep.
Minimum, and then they write it off if they can't charge you.
And then there's no recourse once you've done one appeal, right?
Right, and nobody knows that. Like everybody keeps getting these bills, and they're aggressive with the way that they send these bills. And they would tell me they'd write it off. They told me it was going to get written off.
Yep.
And I had no clue. But after going through this entire process, I've learned you can actually get these companies to make you either pay like pennies on the dollar. Or you can get it to be written off.
Yeah, because there's the price they've negotiated often with provider.
Of course, it's
in some ways,
less.
And then there's the price they bill insurance, and the whole system just allows this sort of 2-tier type pricing to exist everywhere. It's totally accepted. It's standard, And yeah, they're happy to sell off the debt, pennies on the dollar, and then have someone else collect it. And if you negotiate hard and understand what you can do, you can often settle those debts for a lot less than you thought you owe.
Wow.
And it's horrifying, but it's just,
and that's great. And you're going to democratize that.
I'd say I'm supporting a company that is making a play to make a dent in that. I don't think any one company can take it down. We're talking about a true ecosystem that has built up over decades, and it's tied in with politics and technology and large companies and investors who want to protect profit margins.
But just for the narrative, for the individuals, that's basically what you're trying to accomplish by using this company.
But the way I'd say about it is healthcare in this country is broken. I mean, it's broken in many countries, and there's no perfect answer, but we can definitely imagine a better situation than we are in today. And there are lots of folks, but I think in general it's not the provider where the issues are. Not saying they couldn't do a better job of customer service and patient service and so on, but the real issue is tied up in the money and the financing and the way it all works back there. And so any technology or company that is striving to address the inefficiencies in one part of it, particularly if it has systemic ripples that it can cause throughout the rest of the ecosystem, is something that would be intriguing in my next phase of investment. A return is sort of, I'd say, rule number one. And then rule number two would be, I want to invest things which are going to do good as well as do well financially. So yes, I have investments in all the standard places that people would have investments, but I also would like to make investments in those things that matter. So whether it's healthcare, education is another one that I had a conversation last week about potentially getting back into some education investing.
Oh, interesting.
Just because I spent time there,
I
think it still matters. I feel like the world has bizarrely really not moved on much in 20 years. Education system really feels kind of the same. And especially with AI coming online now, I worry about whether or not new solutions are required. And I feel like the problem we think we're solving for is being challenged once again. So that, trying to educate for a world where AI is pervasive and at everybody's fingertips, what does it mean to be educated? I think there's interesting questions around, and
that's going to change completely.
I think
you have all of this education at your fingertips. It's like when you have a calculator,
you have all this knowledge, and you have this processing power. Do you have an education at your fingertips, or is education something that sits outside of AI?
Because you still need to have an ability to absorb this information. So maybe we'll be using AI in classrooms to learn how to absorb information faster. Instead of relying on memory, are we relying on a source of information?
If you have a perfect memory and perfect recall, I remember, I'm sure we went through variants as a society of this problem when calculators were first introduced. Initially they're banned and you can't use them in exams. But at some point it's like, well, surely we can integrate that in. And what does the perfect human plus calculator combination look like if they are highly functioning? And I think we have not yet developed a point of view about what the integrated human AI, I'm not talking, wetware on the brain.
Right, no, none of that.
What does the integrated, augmented human look like in the workplace? What is it we require from them? And one of the reasons is we haven't really done the deep thinking. We haven't had the experience yet, because time just needs to pass to see what's wrong and what works and what the side effects are. And AI hasn't reached its end state. It's rapidly progressing to the point where the capabilities change over 3-6 months, such that the answer to what an augmented AI human capability would need to look like is going to be different 18 months into the future. So I think in some ways the question is not yet answerable with any certainty. That doesn't mean you can't make speculative early stage bets on people that think they have a vision that might have more longevity or might be higher impact.
I mean, that's really incredible that you're doing this, and I feel like it goes back to your roots almost, trying to focus on building businesses, focusing on growth, focusing on being an innovator. This is such a pleasure.
Pleasure, Julien.
On Alasdair. All right. And that's a wrap. We will have all the links in the description to some of Alasdair's projects as well as some of his past works. It was incredible in listening to this individual. Highly recommend you go through maybe even once or twice to take a look. Thank you very much.